Daily market wrap for Thursday, 28th of May. Jack, first up, CPI data yesterday came out softer than expected. What's been the reaction of that in the markets back home?
Yeah, so the Australian CPI, which is the key indicator of inflation, was 4.6% last month. It was tipped to drop to 4.4. It actually dropped down to 4.2, which is a lot softer than the market was expecting. But it's important to note that the RBA actually looks at trimmed mean, which takes out outliers. So the main driver of the greater than expected drop was the cut in the petrol prices. So obviously that was the government intervention with that. However, that wasn't taken into account with the trimmed mean inflation, and that actually rose 10 basis points, and that's what the RBA has really got to focus on. What that actually means is that's got to inform the interest rate decisions, but it wasn't actually as hot as the market expected. So now what was expected to be rate rises throughout the year as the year progresses, now the market's sort of cooling on that, and it's almost now 50-50 whether there'll even be a rate rise in 2026. So that's kind of flipped a little bit, so that's important to note.
Okay, thank you. And the US Secretary of State confirming that the peace talks with Iran are progressing. Has this given the markets confidence as opposed to Trump, for example, saying something similar?
Yeah, I guess you kind of hold a bit more weight when another senior official comes out and confirms something. Obviously, Trump does talk a lot and talks about anything and everything and goes both ways. So when another senior official is coming out and sort of reconfirming the market's narrative and sort of the optimism, that's obviously very positive and had a big effect on the oil markets.
And on the back of the oil, again with the supply constraints, so the UK regulator has just announced that they're going to increase the price cap. So how's that going to flow through to consumers going forward?
Yeah, so the regulators basically come out and said energy companies can now charge consumers more for the upcoming summer months in the UK, the highest level in almost 2 years. So this is starting to see the real world impact of these supply shocks because of the conflict, and it's now flowing onto the market. What it could do for the currency is energy prices rise. It could spark inflation. Inflation actually cooled in the UK last month, but it could sort of reignite that. Could have a short-term boost for the pound. However, if this does drag on and supply constraints really do squeeze the economy, stifle growth, the long-term effects is the whole economy will sort of start on the decline. That'll push the currency down, push all the equities down. So we've got to sort of wait and see whether it's short-term effects or more long-term effects.
And today, the ECB president giving remarks today around the state of the European economy. Just can you explain the hawkish versus the dovish sentiment?
Yeah, of course. So hawkish is just terminology for remarks indicating rate hikes are likely. So whenever central banks talk about raising rates, that's hawkish sentiment. When they're talking about dropping rates, that's dovish sentiment. Rising rates boost up currencies, falling rates drop down currencies because of the yield differences.
Okay, thank you. And big one today, US April inflation data coming out. So I guess similar to Australia, what sort of things are we expecting to see off the back of this if those numbers are not quite what we expect?
Yeah, so this is the key inflation data for the US and what the Federal Reserve will be keeping a close eye on. Expected to hold at 0.3% for their trimmed figures. Like with every other central bank and Australia, if those figures come out different to what's expected, that'll spark immediate action in the currencies. If it comes out hotter, so it's greater than 0.3%, the US dollar's got to get a big boost, so watch for that today. Conversely, if it comes out softer, if it's not as inflation's not as hot, the dollar will drop off.
And what time's that coming out today?
It'll be probably later this morning Australia time, if not early afternoon normally.
we can confirm that when we send the
Yep.
report around. And the Aussie Kiwi, so a big drop off yesterday, no doubt on the back of that announcement.
Yeah, so when we talk about inflation not being as hot as we might have thought, and the RBA flipping their sort of sentiment about rate hikes, this is the actual impact of it. So you can see the Aussie dollar value dropped right off against the Kiwi. New Zealand came out and said we're holding rates, but their statement that came out with that decision was very hawkish. So they're likely to raise rates as the year goes on, whereas Australia's likely to hold rates. So that difference in sentiment is the big driver of that price, and for it to change 1.5% in a single day is a pretty significant change.
And silver, one we talk about occasionally with silver, not as popular with traders as other precious metals, but almost a 3% drop yesterday.
Yeah, big percentage drop. And with the precious metals, the traders involved in that are really going to look closely at the US inflation data today. Obviously, they're crossed with the US dollar, but in an environment where inflation's rising and rates are rising, that's bad for assets like gold and silver because they're non-yielding. So when the rates are going up, that means your yielding assets are basically your interest payments, your dividend payments. So when rates go up, those increase, whereas you're not getting any of those yields from gold and silver. So investors are more likely to put their money in those yielding assets, which will cause the price to fall. So the inflation data out of the US will have a big impact on the precious metals today.
Okay, thank you, Joe. And oil, which we've spoken about, so a 4% decrease on the back of those peace talk announcements. Anything further on this one, or?
No, there's sort of no major news on sort of ships getting through. There's sort of a trickle. There's a couple every few days or so. So there's no real change in supply. That price difference is purely on the back of sentiment regarding announcements coming out of the political parties. So you can see how much of an impact it's having on the price.
And some big moves in the ASX 200, bouncing up and down around that 86.70 mark.
Yep.
What do you think we can expect to see moving forward, especially with on the back of some of those recent announcements?
Yeah, it just shows kind of the inverse relationship. Whereas the Aussie dollar lost a lot of value, Aussie equities actually gained value. That's because it's cheaper. It's going to be cheaper for companies to borrow money if the rates are lower or not increasing. It also means their valuations are greater because the way they're valuated improves if the rates are lower today. So that's why you can see a bit of a bump. And again, if the sentiment moves that there's not going to be rate hikes, it's got to hold. That's got to be more positive for Australian equities.
And so the Aussie dollar itself, similar with the Kiwi?
Yeah. So, dropped against the US dollar today. Again, if news comes out today, hot US inflation data, rate rises are likely. Expect the dollar to drop off even more against the American dollar.
Okay. And back to oil for the chart of the day. So just over the past sort of 3 to 4 months, this is just a really good summary of what's been happening.
Yeah, we talk about oil a lot and we sort of look at it in really myopic context of a daily basis. So this is just taking a step back and having a look what it's done throughout the year. So the two bottom blue lines, the $65 and $55 range, oil was actually trading at $55 in mid-December. The vertical blue line is the start of the Iranian conflict, and you can see just how much it skyrocketed off the back of that. Up the top, we've got $120, which the price kept testing at various moments. So obviously that was greater than twice the price it was only a couple of months ago. The middle line is that $100 mark. And you can see it's sort of holding below that the last few days. And what analysts are expecting, if the peace talks do hold and a deal is agreed upon, that lower pink line is $90. It's expected to go below that, but it's not going to fall back to the blue range anytime soon, just because we're going to have those longer term impacts of the supply shocks. So even if the supply channels free up and we can get the ships through there and turn the tap on again, the existing inventories are going to take time to fill back up to the pre-war levels, so there's going to be lasting impacts. So oil is going to stay elevated for the time being.
Thanks, Jack. It's good analysis. And the article of the day. So, I believe this is just around which markets are winning and losing on the back of this conflict. Yeah.
Obviously, this has been the biggest geopolitical shock we've had for a little bit. So it's just showing what assets are performing well as a result of the conflict and what assets are performing poorly. So if you want a bit more of a look at sort of the wider impacts, it's a good article to check out.
Thank you. Questions from you guys?
Who are the winners and losers?
Well, obviously the winner has been oil traders for now. Equities have sort of won as well. That's sort of more due to the US side of things, but obviously the tech rally's been crazy and sort of largely been insulated from the geopolitical shocks. And then obviously it's driving up inflation a lot, so a lot of the safe haven currencies have sort of received a real boost, like the US dollar and the Swiss franc.
All right.
Thanks, guys.
Thanks, guys.
Thank you.